Hey, it's Anthony Meisner at Land Title. Came to bring you your Boulder County market update. Let's dive right into the big stuff here. If we look at the market snapshot as a whole, inventory is down about 11%. Under contracts are super flat compared to last year, but sales prices have slipped 6%. Now, this really dramatically changes depending on the market part, the part of the market you're in, location, attached, detached, that kind of thing. So, as we kind of dive into this, let's talk about detached first. Way less inventory in detached, mostly around the middle section of that market. You can see 16% less. Under contracts, though, because more buyers are out in this part of the market, are up 6%. That's a really good sign that we still have a strong amount of people out shopping and purchasing homes. The main reason that this could happen is we really are down a little bit in our average sales price. So with that slip in sales price, people feel like they're getting a deal. It's a good sign. Now, if we look at the attached part of the market, this is going to be wildly different. We have about the same amount of inventory. We have a lot of sellers interested in getting out of those properties, but we're down 12.5% in under contracts. Our solds were down 25% last month, and the average sales price is slipping even more. Well, let's take a look at what's going on as far as inventory and maybe what to expect. So if we look at the city of Boulder year over year, it's down 17% in active units. That's actually one of the lowest. Really one of the most stable. Longmont is also flat, so that's a good sign. Everywhere else, we're talking Erie, Lafayette, Louisville, Superior, and Niwot. Oh, sorry, not Niwot, just the L towns in Erie are all down about 30 to 40%. So way less inventory in the detached market. People are out there shopping, and it's actually creating a little bit of a buying frenzy, even though buyers still really have the upper hand in most of these situations. The attached part of the market, though, is really the flip side, right? I mean, we talked about how the inventory is really stable. You can see there's 278 units on the market in the city of Boulder. It's a huge surplus of inventory. And if you look at somewhere like Longmont, similar size city, and only 96 units to kind of put that in perspective. And that's very similar to last year. The only place that has less attached units on the market than a year ago is Lafayette at 25% down. But Erie has 34 townhouses on the market. That's up almost 80% from this time last year. If we talk about month supply of inventory, detached single family, not all markets are created equal. The L towns and Erie are all around 2 months of inventory. Longmont being a little higher at 3 months. You get into Boulder and Iowa, though, those higher end parts of the market, we're at 5 months of inventory. That is a lot. Look at attached, though. We start at 5 months of inventory. Everybody's at 5 months except for Lafayette. They clearly are the victor here with 3.5 months, mainly because we have a different product type out there. Those townhouses that are newer would make more sense. They would trade similar to single family. But then you got Boulder at 6 months, Superior at 9 months, and Niwot doesn't really have a lot of attached. So the 1 or 2 duplexes doesn't really count. Now, if we look at the days in MLS, here's something you can get around, though, is the fact that detached single-family homes, depending on the market, are trading relatively quickly. 35 days on average to go under contract. Almost all the cities are the same, including Boulder. Erie, a little bit longer at 44 days. Niwot, super fast last month, but keep in mind, it's a very small market and sample size. The attached part of the market, we don't even get started until about 60 days. So that's where the average is right now, almost double what the detached market is. Superior, though, good news last month is it traded at 32 days, but keep in mind, much smaller sample size there, so not as many sales. If we look at the actives and solds by price range, this is detached single family only. You can see that active units have really, kind of swayed month over month, kind of up in that seasonal trend, but also that year-over-year numbers across the board are down, except for the 3+ million market, where we are seeing a little bit of an increase in units. Now, the sold units, luxury seems to be down a little bit. Anything year to date over 3 million, down 30%. A couple less than 2.5 to 3 million now. We had a pretty slow month last month for sales in that market. That market was way ahead in the prior month. But the 2 to 2.5 market right now is booming. 50% more sales than we had this time last year. So luxury is definitely not dead. It is just trading in a different way than it did before. Good news too, 1.5 to 2 million, also up about 9%. Now, where we're seeing the most sales take place, that biggest increase, that would be in that 800 to a million range, which is a good sign because that's a lot of those median to average home buyers in most of those markets are still buying and selling, even at the, sort of imbalance in the the markets. So the other thing, it was kind of interesting to look at 500 to 600,000 was down 11%. So that was notable. If you look at the attached market, though, this is where we have a very different experience. Less inventory around a lot of parts of the market year over year, but we have more luxury on the market, and we have $600,000 to $800,000 townhouses, more of those as well, about 7.5%, and where we're seeing a lot of inventory start to stack up under $400,000. Now, that's a lot of stuff in the city of Boulder, price drops, whatever. HOAs have made it so unaffordable that really that product type isn't trading right now. It's very difficult to see. Now, there are more of them going under contract and getting sold. There's 28% more sales under 300,000 right now. So it's a good sign. It does mean that at least people are paying attention to that, because they are a bargain at this point compared to where they have been. But the bulk of the market really has not seen as many sales this year. So it's been a very tough year for the attached. If you look at it by month supply, you can see price point is very similar to those L towns, right? We're talking 2 months of inventory. This is actually a lot higher than it was a few months ago. But as sellers are starting to pile up a little bit, we're getting a little bit more back to where it might be imbalanced a little bit, less market appreciation there, but really just stable environment, basically anywhere under about 1.5 million. Now, we do have a lot of inventory stacking up over 1.5 million. And then once you get over 2.5 million, you're back into those 27 months of inventory over 3 million. So you look at that, that looks great. But the days on market, no matter where you are in the market, if it's priced right and it's a good product, it does seem to be selling quick. 30 days in MLS on average right now is a pretty good number. The attached market, though, you've seen a few things trade. Good stuff clearly seems to be selling in the luxury market, but it does take a little bit longer to get stuff sold. And as you can see, 800 to 1 million, the slowest part of the market right now, 94 days on average, but it could largely be due to the fact that there's 6 months of inventory there, right? So when we start at 4 or 5 months of inventory at the lower price ranges, and you get up into the luxury market that feels a lot like the detached luxury market, it's very similar. So hopefully that's helpful. I usually don't talk too much about the sold analysis, but I did want to take a quick second to break this down for you this month. I know it takes a little bit more time, but I think it's noteworthy that based on the city, we are seeing a drastically different number of sales. So over the last 12 months, here's where the changes really lie. City of Boulder, very stable, 4% increase in sold units. Louisville, though, 14% more sales. That's a notable amount. Lafayette, in the last 12 months, we were up 21% in sold units. That's a huge change. And same with Superior, 20%, almost 21% in sold units. Niwot's down a little bit in sales, only 8 units, but that does represent 14% drop. Longmont, also the same thing, almost a 10% rise in sold units at 1,200 units sold in the last year. So if you've got houses to sell, they clearly can get sold, assuming your price is realistic. Erie, nearly flat. Now, the attached market, this is where we really see it. All these numbers are pretty well negative. 20% drop in Superior, and in Longmont, we're about 22% down. The interesting part is with Boulder's prices coming down, the city of Boulder actually is about flat to this time last year. Louisville down about 9% in sales there. The only one with a positive number, Lafayette, up 4%. Lastly, let's talk about average sales price, and then I'll get you back to your day. Detached single-family home here, this is really interesting to watch. Over the last 12 months, the whole county has trended down about 3%. It's changed drastically depending on the market. So City of Boulder right now is showing an 8% drop in detached single-family homes prices. Now, the median seems to be doing remarkably well. So this means that the higher-end part of the market is really pulling that number down. Louisville up 6%. That's still a really good sign. Superior's up 3%. Niwot up 11%. We're selling more expensive homes in Niwot. It really is, a discovered secret at this point, from what you can tell, right? Lots of money moving into Niwot. Erie up 4%. That's a good sign for their average sales price. And Longmont down 3%. So that's kind of where everything's landing. Attached market, lots of negative numbers here. Superior being the only one with a positive number, but I think this is because we're just selling a different product type there than before. They clearly are also getting compressed. So City of Boulder down 9%, Louisville down 10%, Lafayette down about 8%, and Longmont only down about 2%. Erie's the winner here in most respects because they're selling a very similar townhouse product that have been built out there. Those are basically flat. So it's good to see. If you have any other questions or concerns or need any other data or information, I'm always happy to help. Again, this is Anthony with Land Title. Hope you have a wonderful